Good morning from London. I'm Anna Edwards alongside Guy Johnson and Kriti Gupta. We're an hour away from the opening trade. Here's what you need to know. In earnings news, Commerzbank raises guidance but misses profit estimates. Rheinmetall maintains its outlook. We will be speaking with a slew of companies throughout today's show. Uncertainty reigns as the US Supreme Court hints it could put significant limits on President Trump's sweeping global tariff agenda. Futures are lower following a day of gains on Wall Street as dip buyers swooped in to take advantage of the tech sector weakness. Traders look ahead to today's Bank of England rate decision.
Futures lower, of course, in the States. Not so much here in Europe, though. Virtually unchanged when you look at the picture right here on this side of the Atlantic. To me, what's interesting is the 10-year yield, 4.14 on the U.S. 10-year as we really digest those inflation questions. The shutdown on day 37. And, of course, cable, 130 on that currency pair. The countdown to the opening trade starts right now.
Thursday morning, good morning. There is what can only be described this morning as an explosion of earnings. We have so many, we barely know what to do with them. And we have so many CEOs coming up, we're going to be packing the show with them. Let's start with Maersk. The numbers are just hitting the screen right now, and it looks like a beat and a raise from Maersk. As far as I can tell, the numbers look pretty good. The outlook looks pretty good. Does the outlook look, though, good, given the fact that actually we've got a bit of a capacity issue coming into this market, and we've got a Red Sea issue that we need to factor in? What is going on here? We're going to find out. We're going to talk to the CEO very shortly. Is China rescuing this quarter for Maersk, Kriti?
It's a beat and a raise for AstraZeneca, too, except this time maybe it's not China that's rescuing their quarter, it's the United States. And that's really the focus that's going to be of our interview later today. But let's just go through some of these numbers. Their third quarter EPS, $2.38. The estimate was $2.30. Their revenue is higher. Their EPS is higher. Their guidance is higher. Pretty strong numbers across the board from Astra.
OK, so that's the earnings agenda. That is certainly front and centre for us this morning. But there are other big picture stories that we need to keep track of. And for many of the corporates we speak to, trade and tariffs will be a feature. So let's get to the agenda. And the first topic on the agenda is what we've learned so far, or the clues we can pick up from the Supreme Court. This was close to cameras, audio only. You do get some insight by the questioning that the justices give of the various parties here, the businesses and the government, as to what they're thinking about whether the President Trump's tariff agenda, specifically the April one, has overstepped when he used these emergency powers. Our take on it, the team's take on it, seems to be that there perhaps has been some overstepping. But it is worth reiterating that it is very difficult to really draw firm conclusions. A lot of the justices were asking tough questions of both sides. And a lot of this seems to come down to whether you think this is a tax or not. And a lot of the conversation was about that. If this is a tax on the American people, then surely the power to do that rests with Congress. We will see later on this year, perhaps as early as that, whether that's the view that the justices take.
Oh, great. More uncertainty around trade. That's basically what we've got here. Just what you need. Let's talk about the impact that the US shutdown is having when it comes to air travel in the United States. I'm told we've got a very nice shot of Philadelphia Airport. I think it's about 2 o'clock in the morning there. We'll bring that up for you. There's a number of things you need to know here. Being an ATC controller is very stressful. Not being paid makes it even worse, as a result of which we do have many problems when it comes to staffing air traffic control towers in the United States, as a result of which we've now got Sean Duffy, the Transport Secretary, effectively saying that we are going to see a staggered 10% reduction in capacity in the United States. Domestic capacity is going to be reduced. This is going to come in over the next few days. It's going to be staggered up to around 10%, 40 of the busiest markets. We're going to start to see this effect coming through. But basically, if you're not going to pay these guys, then maybe they're not going to show up to work quite as much because it is quite a stressful job. So you're not going to see international affected, but you are going to see domestic being affected in the United States. A couple of other things to say, one of which is Thanksgiving's coming, and the other thing to say is Christmas is coming. Let's hope it doesn't last that long.
You really paint a rosy picture. I'll add a couple more. You have the airline story, you have food aid that isn't going out, you have military pay that isn't going out, and now there's a question here that even there's a secret stash of cash that governments can use when these do have these prolonged shutdowns, 37 days into that shutdown. And now it looks like the Supreme Court has also ruled, should I say federal court has also ruled, that the Trump administration can't actually access that cash either that would have been used for things like food aid. It's something we talked to Ahold Delhaize about in yesterday's program as well. In the meantime, all is well in the tech earnings space, in some parts, I should say, because you are seeing some good news and some bad news. Let's walk through some of the numbers from yesterday in the U.S. session. Qualcomm did come out. Their forecast wasn't so hot. It looks like a lot of the worries that you saw in AMD and a lot of the worries you saw in the broader chip sector definitely overshadowed the Qualcomm story. ARM, on the other hand, a very different take. Now, I should mention they are in different parts of the supply chain, but ARM really talking about a bullish forecast, more order demand, more excitement around AI. So two very different companies, both kind of in the chip space, two very different takes.
Yeah, two very different takes. And do any of them give us real direction around the AI trade? We've had some really interesting commentary coming through. I'm thinking of Sarah Freer over at OpenAI with interesting commentary about whether we've got too much exuberance in the AI narrative. Well, she thinks we should have more. I mean, this is a business, of course, that is firmly rooted in the AI story, so I guess you might expect it. But she thinks that it's so transformative that we haven't seen enough frenzy.
OK, so let's talk about this and also put it together with the story that we're getting in the FT this morning from Jensen Huang, talking about the fact that China is ahead and China is winning because China has the electrons and the capacity to be able to fire up all these power stations that are going to deliver for OpenAI. I think it's fascinating that the CFO of OpenAI is talking about the fact that maybe we need government aid. There's a government backstop here. Is that a conversation that's about to start?
Yeah. For the sector, she reiterates.
Yeah, OK,
rather
for the
than
sector.
For them,
OK,
but still relevant.
Fine,
yeah.
They are the sector. Let's kind of, they're at the centre of the sector. It's interesting, so I did some digging. The Pacific Railroad Act of 1862 is what comes to mind. Comes straight to mind.
Naturally.
Basically, the government provided backstops for the railroad build-out at the end of that century. And you do wonder whether something similar is going to be required.
This is the kind of industrial revolution that we're talking about, perhaps.
And maybe the similarities are there, and maybe that is what we are going to start to see hints at. Let's talk about some of the numbers that are coming through. Rheinmetall, the big German defence giant, is out with numbers this morning. As far as I can tell, nobody cares, OK? And here's the reason why. Everybody is looking forward to November the 18th, which is when this company has a big capital markets day. They're also really looking forward to 2026, and they're really looking forward to what is going to happen, say, around 2030. This is a story of anticipation. Rheinmetall is an anticipation story, and we have the CEO joining us now. Armin Perpeger joins us from Dusseldorf to talk about these figures. Armin, great to have you on the programme. Everybody's looking forward. Everybody's excited about what you are going to be delivering in terms of the rearming of Europe. Is there anything within the current numbers that you've just delivered, which look pretty good, that tells us about what happens next year and what happens the year beyond? What should I read into today's figures?
Yeah, first of all, good morning from Germany. And yes, I think we should go into the different divisions. So if you see what happens at the moment on our ammunition side, we are on a very good way with new production lines. As you know, we want to start now to build up the production lines in Bulgaria, in Romania, in Lithuania, in Latvia. So the ammunition line is absolutely, and the ammunition story is absolutely in line. So this is a very positive signal. The second thing, what we do now in the next year is we do the automation of the vehicle systems, because we have to deliver only on the European side and mostly for Germany, 40,000 vehicles. And so we have to automize our production lines. This is what we do at the moment. We invest in that area so that we can ramp up the vehicles a lot. Number three is that we start now next year the production of satellites. So the first 40 satellites will be under contract, I think, end of the year. And but Germany needs much more. We speak about 200, 300 satellites that we are able then to produce here in Germany. So the next thing is on the digitization. From the digitization side, connectivity, etc., we build up the factories.
Okay.
So we are in good shape.
I mean, you're building out, you're getting ready, you're going to be producing an awful lot of kit for the European defence ramp-up that we are going to be seeing. You are at the centre of that story. Does it matter if the German budget kicks in this quarter, next quarter, the quarter after that? Kind of, what do you think 2026 is going to actually end up looking like? And when that kind of process starts, when that budget sort of money starts to flow through, how quickly does it kind of feed down to you? How instantly is that process going to unfold?
Yeah, so first of all, we ramp up at the moment on the German side the budget, and they do what they say. This is a very positive signal for us. 5 years ago, there was a lot of chats, but nothing happened. Now we are on the way to sign the contracts. So next year, our expectation is there is a potential on the German side, which is really on a level of up to 50 billion. As you know, this year the order intake we expect is on a level of 80. And so we fill up the pipeline, and that's the reason that we have to make these investments. And at the moment, we are on a way to make everything happen.
Armin, good morning. You say that the German government is doing what it says, which is interesting to hear. I note from your statement today, you say nothing less than our democracy and the independence of Europe are at stake, such as the anticipation around the sector that you operate in. Would you say that everywhere in Europe is taking this as seriously as it needs to? Is the money as forthcoming as you want it to be?
I think that not all European countries have the ability to invest such a lot of money like Germany is doing at the moment. But if you see what happens in Italy, the Italians are signing now contracts. The first contracts are signed also on the infantry fighting vehicles. The budgets are going north, which is positive also. The same is for smaller countries like the Netherlands. Look to the Baltics, look to Poland, look to Romania, and a lot of other European countries. I see at the moment a really good opportunity that everything what the Europeans say that they do. Not as much as Germany is doing, but yes, they will go forward.
Well, Armin, let's broaden that picture even further, if we can, and talk about the NATO spend that we're looking to capture. You mentioned the rearming efforts that are coming from Europeans. We know the United States is still contributing to NATO as well. You have a few partnerships with the likes of Lockheed Martin and a few other defense companies. Can you give us an update on, one, what those partnerships look like, and two, the percentage of the NATO rearmament effort that Rheinmetall looks to capture?
The relationship that we have with the American big companies is a really good one. It's a very trustful relationship that we have, especially also with Lockheed, but not only with Lockheed. So as you know, we have cooperation agreements with Anduril. We are on the way to speak with Raytheon. Because we step in now also into the naval side, so it's excellent, it's fast, and it's very, very trustful. So we are able to pick up usually from the German side 40 to 50% of the budget of the German budget, and I always calculate that there should be a possibility that between 25 and 30% of the European NATO budget, Rheinmetall is able to pick up. So it's a lot.
Armin, can I ask you what is standing in the way of your business expanding faster? I appreciate that you're expanding very quickly, but is there anything blocking your ability to step up as quickly as you want to?
At the moment, not. We get the permissions, and I get the permissions in weeks at the moment to build up everything. For sure, we need production lines. As I told before, we have to go to automation. Otherwise, it will be not possible to produce as much. In some areas, we are ready. I see at the moment no obstacles.
All right. Rheinmetall CEO Armin Papperger, we thank you so much for joining the program this morning, giving us a take, of course, of those earnings numbers and the rearmament story across Europe. We're going to continue the earnings conversation in just a moment. But before we do, a couple of things to add to your agenda this morning. The Norges bank rate decision happening in just under 2 hours, which is, of course, the precursor to the BOE rate decision at 12 p.m. UK time. The earnings story continues on both sides of the Atlantic. Plenty of them on our show, but plenty in the States as well. Warner Brothers, Moderna, Ralph Lauren, and, of course, News Corp, all comboed with a very fun combination of Fed speak. We'll have Waller, Williams, and Barr speaking, but I feel like the highlight for a lot of folks in the States is going to be that Tesla AGM, a massive vote when it comes to Elon Musk's pay package.
We should tell you that we have special coverage coming up at the Bank of England, of the BOE rate decision, of course, at 12:15 London time. Governor Bailey's press conference later in the hour, of course, as well. So lots of BOE focus later in the programme, later in the day. But it's a very busy day for earnings interviews. We'll be talking to the chief executives of Vestas, AstraZeneca and Watches of Switzerland, along with Continental's CFO. Up next, though, Vincent Clerc will be with us, the Maersk CEO. This is Bloomberg. Welcome back, everybody. This is the opening trade. It is Thursday, the 6th of November. A lot going on, a lot of earnings coming through. The European futures picture, trying to reflect some of those, perhaps, looks a little bit mixed as we digest these numbers. Let's get to the numbers of Maersk, the global shipping giant. And the story seems to centre around the guidance here for the full year. Full year underlying EBITDA, the guidance is being lifted perhaps a little versus expectations that pre-existed in the market. Let's get to the Maersk CEO, Vincent Clerc, who joins us now. Vincent, very nice to have you with us. Thank you for joining us. Just how positive are you about the full year, then, given that you seem to be upgrading your expectations a little bit, or raising the bottom end of guidance at least?
Yeah, I think for us, really, the key message of this quarter is a message of resilience. Resilience of the global economy, which continues to fuel a very strong demand across the different businesses that we're in, and resilience also of our operation. We face a lot of inflationary pressure, bottlenecks in different places. We still have to sail around the Cape of Good Hope to get a lot of the goods to their final destination. But despite all of these inflationary pressure, we've been able to trim our cost base. We've been able to focus on margin, and across all the different businesses that we have, we've delivered strong volumes and improved margins. And that really helps us actually lift the bottom of the margin and say, as we stand today, we're probably going to do towards the better end of what we were expecting, and some of the more difficult scenarios where higher impacts from inflation or from lower demand were built in, they're not going to happen.
OK. And Vincent, you're talking about Chinese growth and the way that weighs in on the global container market, and that's one of the drivers maybe of some of the positivity we're seeing here. Is China doing better than you would have anticipated, given the tariff environment? We've seen the Chinese leadership talking about 4% growth per year out to 2030. Is this a better outlook than previously you'd expected from China?
I think clearly China, when I look at the demand perspective, China is the engine of this strong and resilient demand. A lot of it is coming from the manufacturing capacity that there is in China that devotes a lot of its focus on export-led growth to maybe deal with some of the domestic sluggish demands that they have. And we see that across the different geographies, whether it is into emerging markets or mature markets like Europe, even into North America. We continue to see positive growth from China volumes, and China is continuing to fuel the strong demand. So definitely from our perspective, the resilience of production in China, the resilience also of the importing markets to actually consume the goods that China is exporting to them is one of the core foundation for the strong results that we have had this year.
Vincent, it's Kriti in London. Let's zero in on the other side of the Pacific, if we can. You mentioned the volumes going into North America, and specifically the United States, especially. Looking at earnings, that seems to be where perhaps a little bit of the pain point is, as so much of the kind of front-running of the tariffs has already been baked in. Going into the holiday season, what does that actually look like? Paint us a picture of the next 6 months of volumes going into the United States.
Yeah, so what we have seen is obviously following Liberation Day, we've seen a softening of demand. There has been certainly a pull forward before. It's very difficult for us so far to decipher whether this more soft demand that we have seen into North America was more an inventory correction following the pull forward that there had been before, or was more a reflection of lower demand. What we've seen actually over the past few weeks is the seasonal demand is starting to pick up quite strongly. It started a little bit before the summit between President Trump and President Xi, and it seems to continue now. So I think for as far as the next 6 months are concerned, we expect still quite a resilient demand into North America. with goods starting now to pick up pace compared to what we have seen in the last couple of quarters.
Well, expanding on that point, Vincent, just anecdotally, how are you seeing clients respond to the policy changes out of the White House, whether it's tariffs, whether it's shipping regulation, whether it's other kind of forces that are starting to come out of policy? Is this a wait and see kind of game, or are you starting to see your clients front run some of these policy decisions?
Yeah, I think for one of the core, risk that we see is the uncertainty that there is. I think there has been a couple of really good outcomes recently, especially coming out of the Trump-Xi meeting earlier this month. But what there is a lot of these measures are still timed. So it's reprieve for a year on chip fees. It's a different situation on tariff also, where they are still being adjusted, and where the long-term playing field is still unclear. So there is still, from a lot of our customers, a bit of a wait-and-see approach. Stick to your guns, stick to what you have today, because it's very difficult, given the current climate, to know exactly where the situation is going to settle on a more permanent basis.
Vincent, just picking up on that, good morning, it's Guy. If the Supreme Court in the United States were to toss out the IEEPA tariffs, which is kind of circa 60% of the current tariffs that are being applied, what do you think will happen? Will there be suddenly a huge rush to try and get stuff into the United States? Are you preparing for anything? Do you see anything around that could be material for the business?
So I think our read of the situation is that most of our customers in the US have actually are not trying to game the system, because it's a very dangerous thing, given the unpredictability that there is in the tariff regime, and given the time that it takes for them to order goods and the cost that there would be to store them if they were to be on the wrong end of policies. So I think we'll have to see how the discussions in the Supreme Court ends up. I also want to say that from a political perspective, there is bipartisan support for the fact that the trade deficit needs to be addressed in the US. So even if there was a discussion at the Supreme Court and there was a decision that went in a way that is not supporting what the administration has implemented so far, you would probably land into a legislative process where at least some of the tariffs would be maintained. And so I think this gaming of the tariff is not something that we see as very, very likely. What is really important to follow is the underlying demand from the US consumer. That's what is really going to determine, beyond the small waves of policies, this is what is really going to determine the strength of the demand for us. And so far, I think it's been surprisingly resilient compared to what a lot of analysts had predicted.
Final quick question from me on the Red Sea. You've highlighted within the numbers this morning that it's likely to continue as not being an option for shippers until probably at least through the full year. This kind of takes me towards a capacity question. There is a lot of capacity coming onto the water at the moment. And I'm wondering whether or not you end up in a situation where suddenly the Red Sea opens and that kind of capacity issue becomes a problem very quickly. Is that kind of, again, what you're preparing for? What do you see the lie of the land or the lie of the water looking like when it comes to that and the relationship to that capacity question?
So first of all, I think it's really fantastic that we have had a ceasefire in Gaza and that the situation seems to be headed in the right direction. We hope that this will continue and that we will soon be able to relook at the decision and see whether Bab el-Mandeb can be safely reopened, and not only reopened for a week or two, but reopened for the foreseeable future. I think when you have a high fixed cost business like you have in shipping, you will consistently have some issues in adjusting demand and supply. And in this case here, this is exactly what is going to happen. So we will see some, probably some time of oversupply, but this will be corrected over time. And I don't think it's going to be a factor in the long run.
Okay, we've got to go. Nice to see you. Thanks for the time. This is Bloomberg.
Minutes away from the start of the opening trade. If you were looking for some excitement, look elsewhere. Futures are virtually unchanged over in the States. A similar story on this side of the Atlantic. marginal underperformance by the CAC. I'm not even going to call it that. Down about 0.1%, Anna. Maybe something will shake out in 30 minutes' time.
Yes, trying to factor in all these divergent earnings stories, perhaps. I've seen a lot of companies sticking to guidance, a few looking more interesting than that this morning. But that's the earnings story. This is where the bond market picture leaves us then. Kriti, I mean, you have to go a lot of decimal places to find any movement, don't you, in those? So we won't linger on the European bond market story. It doesn't seem to be where the action is this morning.
You guys have got no action. I got some action. Let's talk about where the action is. OK. Let's talk about Vestas. Big day yesterday, huge day yesterday. Take a look at this. Stock up by nearly 15%. The Danish turbine maker detailing a strong order book. It's announced a 150 million euro share buyback program. The company's CEO is Henrik Andersen, and he's sitting around the table with us this morning. Good morning. Can I just see the smile?
Yeah.
There it is. Fine.
Absolutely.
We've been waiting for this smile for quite some time. This is a turnaround plan that has been ongoing really since the pandemic, and I kind of finally felt yesterday, tick, job done. Is that the case?
Yes, it is.
Okay.
And as I said, I think yesterday was with a bit of not mixed feeling, but confused feeling, because there was a bit of goosebumps internally among colleagues and other stuff, because as we have said, it's coming. I think already now 3-4 quarters ago, we said we turn a corner. You can now start seeing it. I think there's still a split in the world saying, nah, we don't believe in it. Probably quite a lot also hanging on to wind is not for the future.
Yep.
But now everyone can see sign of confidence. We have cash. We have had a good first 9 months.
Yep.
We can see ourselves through to the year end. 55 days to go today, so therefore it's a good plan. It's been executed, and so
just in terms of context, the 52-week low on the stock is 81. The 52-week high on the stock, which was hit yesterday, is 150. It's been quite a run-in to this. There's been some anticipation that this turnaround story is gaining traction. You're returning money to share. You're buying back shares.
Yes.
Okay, 150 million.
Yeah.
Is that just an appetizer?
We have more cash at least, so we also hinted that yesterday. We only have a 6 weeks window until 17th of December, so it starts today and finishes 17th of December, and we fully appreciate you got to be in that market under the safe harbor rule, and you buy every day. So that's more a structure, but we also said, as we always done, we return net profit as part of that when we complete the full year. But secondly, I would say probably more importantly is we can now see we have a cash balance. We are well through the most heavy investments of our offshore. We have the first offshore turbines out there of our 15 megawatt. So in reality, there much more clarity on the two and the biggest strategic investment we have. So when you then see our multiples of the share, then it's only fair to say to shareholders we can also see that. So there's no need to invest in other things when we can invest in our own share.
OK, Henrik, good morning. I'm picking up on the theme that Guy has started us off on there, and that's the strong share price performance. And clearly a lot of this is attached to the actions of your team, to the specifics around your business at Vestas. But there does seem to be something going on with the sector as well. And I wonder if there is, because a lot of companies in this sector have seen some strong performance, if you look over the last 12 months in their shares. Is this a case of a European narrative around the future of renewables outweighing US reservations about renewables? What's the sort of big picture conversation when you have those dialogues with shareholders?
Yeah, I still think we are unbalanced. And why do I say that? Because if I look at where we are, people are still distancing themselves a bit from the climate discussion. They're distancing themselves from the energy transition. And it's still real. I mean, if we take Europe, we're still 50% non-self-supplied in energy, so we are a net importer of 50% of what we are consuming in energy every day. So whatever we are doing, we are going to build more of every possible energy source we can get to. One. Number two is also, when you then look at it, I think for at least the last 2 years, and it was accelerated last year with sort of the new administration in the US, that there was a bashing. And if you take offshore, I mean, our communication department probably repeated to a media that we're not going to build in Poland. And suddenly there was showed across the world. I even got out of bed next day. And in the Australian industry media, it was saying Vestas is stopping the offshore factory in Poland, and showed a half-finished factory where I was saying, listen, guys, it's a plot of land. We've had an exclusivity on it. And 18 months ago, we told we're not going to build because we want to control the capacity when we look towards 2030. And I think this is where I get sort of a little bit, you know how it is. it goes in waves.
Yes.
But the cycle in 21 was well above any of our performances. You could see it in the share price. But now we are probably also at a point where everyone just thinks they can badmouth offshore. And that's not right either. Technology is working, it's good business. And if we put AR7 in perspective, do you know what? Society here is going to get a lower electricity bill if that AR7 is successful.
Okay, so there's some frustration perhaps with the way that this narrative plays out, certainly around offshore. And Europe is in theory more enthusiastic. But what's happening, though, Henrik, when it comes to the offshore wind auctions is that we're seeing some of them fail and we're getting zero bidders for some of them. What's happening there? How does that play out?
Yeah, I'm tempted here, I'm live, but I will sort of say the famous Einstein quote is keep doing the same and expect a different outcome has a definition from Einstein. And I think I don't understand why we repeatedly try to do the same thing across 27 EU countries and then hope for a different outcome.
What should change?
You know, offshore, onshore, renewable energy is not going to be for free. It has a price. But it is also daunting for me that when you look at most of the European countries, you have a taxation on something we want more of. The price we are putting it out, the cost of installing it, is often a fraction, a third, 40% of what the consumer is paying. That means the consumer gets a wrong picture of what we need to build more of. And that, I think, is the major point. So if I should give praise, and I do that because I like the person, Ed Miliband, he knows his stuff. He knows his stuff. He is addressing it with AR7. There is a longer CFD, there is a price cap in it, so there's a guidance to the market. That's the way to treat the market. Now the auction goes on, and it will be fully subscribed, and I'm pretty sure he will also have offers he could carry through and saying, I can do a little bit more.
Okay, so praise for the current approach from the UK government, it would seem.
Well, let's stick with that story because you have a competitor, Ming Yang, that is talking about investing £1.5 billion in Scotland. What does that entry of that competitor mean for the offshore wind sector, in your view?
There are many announcements out there. And as I said, I've seen that over the years, many of those announcements. I think 5 years ago it would have meant something different than it is today. I think we all appreciate we probably do live in a different world. And therefore, I don't necessarily see that whatever is announced is also what gets built, because we have a difference in what we also see of what is actually our critical infrastructure. And some of that critical infrastructure is, I will say here, prohibited for touching. If we see there's an ongoing debate in Europe around what is defense, what is telecom, what is energy and the grid, and therefore I think we are around the time where we're also saying it's absolutely perfect. Worlds should trade more with each other. Absolutely don't limit that. But there are certain things we shouldn't trade with each other. And that's just part of it.
So do you think that the government will block the Chinese infrastructure bid in this? Is this a national security question?
If you don't put it on your grid, then there is also another thing. If there's no demand for the output from a factory, then it probably gives itself, right? So if you can't sell the output from a factory, then there's no need to have a factory. And that's the same thing. You could flip that around to us. We have talked about Scotland factory for now some years, and we've said as long as there isn't an order book, then there's no need to build a factory, because that's actually just to keep your workers and your good colleagues in the factory unemployed.
Henrik, a final question to you. Your peer, Ørsted, has recently engaged with Apollo on a pretty substantial deal in renewable infrastructure. Are you having conversations at all with some of the biggest private capital players looking for exposure in your sector?
Yes and no. There will be always for us, we are different than Ørsted because we don't own it. So Ørsted is the developer that owns the wind parks and therefore also ultimate our assets in the end. So for us on infrastructure is two things. Either we do it when we see new factory investments, so that's an opportunity, or simply they from time to time also show up in our share price.
Nice to see you. Thanks
nice
for
to
stopping
see
by
you.
to see us.
Good to see you.
Here we go. The CEO of Vestas, Henrik Andersen. Thank you very much indeed. 20 minutes to see how Vestas opens this morning. It is a big week for earnings. We've been talking to executives about the results that we've seen out of Europe. Take a listen.
If you look on our results, it has been a record operating result for the first 9 months and very much driven by growth and then leading to a higher profitability. And growth stems from two factors. One is our lending growth, 13% in corporates, but also the net commission income growth.
Stina Orlop, the CEO of Commerzbank. Up next, the CEO of AstraZeneca, Pascal Soriot from Dubai. This is Bloomberg.
About 16 minutes away from the opening trade. Futures are starting to sell off with a little bit more momentum than perhaps we thought earlier. You are seeing the Euro Stoxx 50 futures down about 0.2%. Look elsewhere on the indices, and you aren't seeing much action to the upside or, frankly, to the downside. CAC futures, of course, down about 0.3 as well. Let's continue with the earnings conversations. We have a slew of them this morning, and of course, we want to go to one that is top of mind for us, especially here in the UK, and that, of course, is AstraZeneca. Their profit rising more than analysts anticipated last quarter. The sales of their blockbuster cancer and diabetes drugs seem to be, of course, pushing the beat higher. The CEO of AstraZeneca, Pascal Soriot, joins us now from our Dubai studios. Pascal, pleasure to have you on the program. Thank you so much for your time. Let's start off with these earnings pictures. I mean, this profit beat is pretty substantial. Just walk us through the numbers and how sustainable this profit beat is.
Well, thank you so much for having me, first of all. And you're right, we had a tremendous quarter, both from a revenue growth viewpoint, but also a profitability viewpoint. We grew 11% on the top line, and the bottom line is growing 15%. And, you know, we're making enormous progress across the world, actually. Every region is driving growth. The fastest growing region is the international region. We're growing by more than 20% at constant rate. The US is growing a lot. Europe is growing. So we're experiencing really very substantial momentum driven by our pipeline of new products and, of course, the excellent work our teams are doing everywhere. We are managing our SG&A costs that are not growing very much, but we are increasing our investment in R&D, and we will soon reach an annual R&D budget of $15 billion, which gives you a sense of the momentum we have and the ability we have to develop products at scale.
Pascal, you mentioned the United States. I want to go to the other pieces of your earnings. We'll start there. About 40% approximately of this quarter's revenue comes from the States. We know, of course, you've been in conversations with the White House, one that's been a real success story. We also know the Trump administration is trying to push drug costs lower and really put pressure on the entire pharmaceutical industry to do so. Just walk us through your conversations there. Is pushing pricing lower in the States something on the agenda for you?
Yeah, absolutely. I mean, what is happening is something that, to be honest, was long coming. Over the last 15, 20 years, many wealthy countries around the world, in Europe in particular, have been shrinking the share of healthcare costs that is allocated to innovative pharmaceuticals. Used to be 13, 14, 15% of healthcare costs, and it's down now to 7, 8%, 7% in the UK, for instance. And the problem with this is that patients cannot access the medicines that could save their lives. The other problem is that it doesn't create an environment that attracts investment from large pharma companies. And finally, the US have been really covering the risk and the cost associated to pharmaceutical innovation. So that had to come, and then this administration, led by President Trump, decided we needed a rebalancing and equalization of healthcare, of the funding of innovative pharmaceuticals. A little bit like defense budgets need to be reinforced in Europe.
It's interesting. We had the US ambassador to the United Kingdom yesterday talking about this very issue, talking about the idea that if investment does not come to the UK or investment leaves the UK, it won't come back. That's a permanent state of affairs. Do you agree with that view?
Well, first of all, let me say it's not a specific UK issue. I mean, it's true across many countries in Europe. But if you look at the UK specifically, which of course is our home market, and we care very much about the UK's, you have a fantastic academic science in the UK across Cambridge, Oxford, London. And then basically you could leverage that science to turn it into products, reality for patients, but also economic value. But it can only work if the UK attracts investments from biotechs, but also large companies to create what is called this ecosystem, this life sciences ecosystem that you see in Boston or San Francisco, and that drives economic growth. But to do this, the UK needs to create an environment that attracts this investment. And right now, the opposite is true. Companies are reducing investment and have been doing this for many years.
I was talking to Mike Dusar yesterday, the Novo Nordisk CEO in Copenhagen. He was saying, you know what, we're actually more American than a lot of American companies out there. Everybody in the pharma space seems to want to be American, but you're actually doing something about it at the moment. You've just converted your ADRs into ordinary shares in the United States, that process going through over the last couple of days. Pascal, is that the end of that process, or is that the beginning of that process? Do you take it further, or are you finished?
So first of all, you know, companies tend to follow science technologies, and also they tend to follow, in our case, pharmaceutical industry, where patients are, where you can actually deliver your medicines to patients. And the US is an environment where science flourishes. You have lots of innovation, and of course access is much easier. Patients benefit almost immediately from our new medicines when they are launched. So everybody tends to, of course, follow this and invest in the US. In our case, what we also want to do is tap into the large capital markets that exist in the US, and we wanted to have this so-called harmonized listing and have a share listed in New York, because we want to be able to access this liquidity. But, you know, we are very happy with our head office in the UK. We have historical presence in the UK and Sweden, and there's no reason to change this.
Okay. But there's no reason to change it. But you're not telling me that that's the end of it. You're leaving that risk out there. Could you ever see, is it possible that AstraZeneca could be a US-listed company with a primary listing in the United States?
Well, the only thing I can tell you, Guy, today is really what we are doing. We are accessing the capital markets in the US. We have our domicile, our tax domicile, but also our headquarters are in the UK, and we are very satisfied with this. Now, what happens in 10 years, I don't know. I probably won't be the CEO anyway. So you know, I think it's really hard to make definitive statements. The world evolves, things change. But I can tell you for today, we are very, very happy having our domicile, our headquarters in the UK, which is a good base. But we also need to partner with the government to create an environment that attracts investment not only from AstraZeneca or GSK, but also from global pharmaceutical companies. And it's not happening today. And it's a pity, because we have so much great academic science in the country.
Pascal, OK, so you're happy for today with the arrangements as they are. Let me linger on the UK for just a moment. You've suggested there that there is perhaps more that the government could do. We have a budget coming up in the UK at the end of this month. You paused your expansion in Cambridge. Is there anything that could be in that budget that would persuade you to do otherwise?
Yeah, I mean, I think, and again, we are focusing on the UK because it's our home country and because you focus on the UK. But the question is also true for many other European wealthy countries is, how do you create an environment that attracts investment? How do you create an environment that helps build a flourishing life sciences sector that will then create economic growth through life sciences? To do this, you need to really make sure that the share of healthcare costs that goes to pharmaceutical innovation is at a reasonable level. As I said, it used to be 12, 13, 15%. Today in the UK, it's 7%. So it needs to change. More funding needs to go to innovation so patients can benefit from these medicines that save their lives, but also we invest in the UK as an industry.
OK, and to try and fix that then, Pascal, would it be enough if in the UK example there was an increase to the threshold of cost effectiveness, which would mean that more of those more expensive drugs perhaps get funded?
Yeah, absolutely. I mean, there's fundamental so-called cost effectiveness number, the cost per quality number that is used in valuing innovation, and it has to change. You've got to realize this cost per quality, and it's a bit technical, but let's call it cost per quality, hasn't changed for 20, 25 years. There's been a lot of inflation in the last 20 years, as we all know, but this number hasn't changed. So we are using a 20, 25-year-old number to value innovation today. That has to change. And if it doesn't change, it's going to be almost impossible to give the appropriate cost-effectiveness evaluation to those innovative pharmaceuticals.
Pascal, thank you. Thank you so much for your time. Pascal Soriot, the AstraZeneca CEO. We thank you very much for joining us. So lots of corporates in focus this morning. We've talked to many of them.
I was going to say, I'm trying to decide what my favorite one is, and I think I have to go to Maersk because I feel like we really got a good worldview of where things are going here. There's so much exposure from a lot of these European companies, not just to the United States and the policy there, but China. And I think the real story that was, I think, surprising to me from Vincent Clerc was that he was saying that most of that growth and outperformance isn't coming from the States, it's coming from China.
Yeah, China's ability to send the stuff it would have sent to the United States elsewhere if it needs to.
Actually, my vote is for Astra, in that conversation we've just had. And here's the reason why. Europe needs to figure out how to grow. UK is a great example of that. Huge pharmaceutical base here, lots of knowledge, huge amounts of research being done. Why don't we focus on the things that we're good at and grow those businesses? How do you grow this economy? And I think that's the question that in some ways the pharmaceutical space is right at the centre of, and what Pascal is talking about there. We've got a budget coming up. Is it a budget that's going to deliver tax rises and very few cost cuts? Is it a budget that's going to deliver growth? I think that's the question that the UK has got to answer. And judging by the tone of the conversation we've just had, I'm not sure it is.
And we forced Pascal to focus on the UK, but he was keen to widen it and talk about the challenges facing a lot of Western countries around pricing outside the United States, which in his view has been funding R&D for the rest of the world for quite some time. Right, lots of earnings. We'll be back with the market open. Futures have been quite uninspiring, but we could see some interesting volatility in individual names. This is Bloomberg.
Thursday morning, busy morning. As you probably guessed already, there's a lot of earnings coming through, which are going to need to fold into the narrative here in Europe. Is it going to be a day where the single stocks determine what the index level looks like? Are the single stocks going to counter out sort of each other? Is that going to be a factor? We also need to fold in what happened yesterday in the States. I read a lot overnight about dip buying. I have to say, I slightly struggle to see it in terms of the index levels. Yes, we were up yesterday, and yes, the prior few days had been pretty bad. But we definitely rolled off into the close. Is that a negative signal? I don't know, but you can take away from that what you will. We did rise. We were up. Europe went out about here. Actually, to be honest, that's kind of where we closed as well. I'm not sure there's that much of a read-through out of the US into Europe this morning, Kriti.
Yeah, no dip buying here, and you can really see that in the futures picture. In fact, it might just be the opposite. Eurostoxx 50 futures down about 0.3%, virtually unchanged on the FTSE. But for me, the detective work here, Anna, is what is going on in France? This is your biggest underperformer on the index perspective, where it feels like nothing else is moving. France certainly is down about 0.4% on those futures.
Yeah, we're certainly keeping on the French market. At the individual stock level then, Kriti, let's have a look at some of the names that are in focus. We have talked to the management of all of these businesses this morning, and all of them could be on the move. Rheinmetall maintaining its full-year outlook, but the story goes longer than the full year, of course. A lot of anticipation and waiting, really, for delivery of the German budget towards the defence sector and what that means for these businesses. We'll also talk about AstraZeneca, that company very much in focus this morning. Profits beating, cancer doing well for them, diabetes drugs doing well for them. A lot of focus on what governments can do around this particular sector. We talked about that with Pascal Soriot. And Maersk certainly will be in focus, Guy, boosting its global shipping outlook as China exports surge.
I feel today's going to be a bottom-up rather than a top-down kind of a day. We start off with the indexes and kind of go from there. Maybe you're looking at this market the wrong way. That's what we're going to do, though. So we'll start off with the indexes, then we'll peel the onion and figure out what is happening. As you can see, the FTSE 100 is down a touch. I think that probably is all you're going to get. We'll see whether or not we get a little bit more traction. But I think you're probably going to open fairly flat for the FTSE 100 once you get all of the kind of main stocks opening. It's going to be interesting to see how Astra trades this morning. It is a huge component of the FTSE 100. Stock 600, flat as a pancake. I think it's going to take a while to get the DAX open this morning. There's some big names that maybe are going to move there. You've got the CAC 40, which is going to be on the move. The Danish market is going to be one you're going to continue to want to focus on and see what is happening there. But honestly, I think we're starting at the wrong end of the telescope this morning. We want to start at the other end, i.e. the bottom-up picture, what is happening with single stocks and therefore by extension, what is happening with the sector story. And Kriti Gupta has all of the details there.
All the answers, always. Let's start with the healthcare sector because that is your biggest upside mover. You have Novo Nordisk right off the bat, to your point, Guy, moving this market to the upside, higher by 2.2% from a percentage base. It is your biggest index contributor and is followed right on its heels by the likes of AstraZeneca. We just had that conversation with Pascal Soriot as well. And then a series of banks and miners. This looks like a cyclical move to me right off the bat. But to the downside, and this is where some of that detective work on the French market comes in, the French market as a whole still closed. But you are seeing the likes of Schneider Electric, Total, and a lot of French names really taking a beating when it comes to moving this index to the downside. But Anna, from a sector perspective, we will have both red and green on our screen.
Yeah, we do. We're quite evenly divided, aren't we, in the early part of trade, slightly more in the red than the green, but really not by much. To your point, Kriti, basic resources by far and away the best performer, and after that, it is the bank sector. So there does seem to be some kind of cyclicality to what's happening here. I was looking at underlying commodity prices. We're not getting a push higher in any of those copper or iron ore prices. Iron ore slightly higher, but really not by much. It's not as if that story perhaps is the driver there, but basic resources is the best performer, ArcelorMittal, Antofagasta. Those are the names moving us higher, sort of away from the earnings story, in fact. And some of those earnings companies that have been speaking to us this morning have not yet opened. Maersk, for example, is one of those. That company not yet trading, waiting for that one.
HSBC's got ex dividend this morning.
Yes.
And it's up. It's going to flag that as being quite significant. The banks are doing fairly well this morning. So NatWest, HSBC, Lloyds Banking Group, all on the upside today. I wonder whether that's a kind of pre-move before the Bank of England, whether there's a factor that we need to fold into our thinking there. I don't know. Could be wrong. Going to be interesting to see how sterling trades around all of that as well. But it's interesting. It's definitely the AI trade that is on the back foot this morning. Schneider, SAP, ASML, tech names are where the weakness does definitely lie.
We should mention we got Air France earnings earlier today as well. The stock's only down by about 0.3%, but they were worried about their strikes and taxes not helping out with their bottom line. So we'll see how that's received as we start to get a little bit more volume throughout these markets. Lots of earnings to go through. Let's get a little bit more of a big picture view. Obi Ejikeme, Global Equities Fund Manager over at Carmignac, joins us around the table. We have a mixed picture on the earnings front. We have a mixed picture on the index front. I'm not sure how much we can glean from that, but just from your perspective, are earnings still driving this market? Is that where we're looking for some direction here?
I think, over the medium term and the long term, earnings typically will always drive the market. So I think there is an element of that at the moment. But I also think there's an element of, is the market a little bit fatigued? And we just talked about the AI trade and how some of those stocks are trading a bit weak this morning. There seems to be a little bit of a sign of let's call it an early sign of a rotation out of some of the highest performers or the best performing parts of the market this year, and some sort of, let's call it bottom fishing or some selective looking at some of the stocks in the market that have not really participated in this upside to the market this year. It's a bit like, let's call it the tortoise and the hare race. The hare's raced away, and that's the AI trade, and people are looking for sort of the tortoise-like trades, the really good long-term stocks that just have not participated to the upside.
What would that look like? I mean, if we're talking about a rotation away from the favorites of this year, specifically in Europe, to me, right off the bat, that sounds like a pull out of defense. That sounds like a pull out of some of the AI, some of the infrastructure names as well. Does that mean we lean into the consumer staples, the luxury, the ones that have been maybe a little bit more battered?
Yeah, I think so. I think there's a bit of that. I mean, rotation is sort of that kind of vague term that we use for like something new is leading the market. I think it's more that profit-taking out of some of the selective winners. They're quite big stocks, and as a result, if you take parts of that money out and you put it into some of these names that have lagged, I think it's interesting. And also, there is a reasonable narrative. I mean, central banks are cutting interest rates around the world. There's discussions about the Bank of England cutting interest rates as well. You mentioned the consumer. That's a sector that's been very, very, very weak this year. So there's elements of, potentially, if interest rates get cut, then who's going to benefit? There's some of the laggard names, so maybe that's an opportunity.
Yeah, we'll see if interest rates continue to be cut or if that's something we have to rethink. But sure, that seems to be an expectation in some places, isn't it, Obi? Let me ask you about the title of your recent research is Staying Sane in a Narrow Market. So how do we stay sane?
Look, I think we stay sane by trying to stay long term. I'm a big fan, and we've got a big chunk of the portfolio in some of these AI themes. And I think by staying sane, you have to accept that it is a theme, it's a mega trend, and I think it will play out over the next 5 to 10 years. There's no doubt about that. But staying sane is not putting all your eggs in that basket and being a bit more balanced about the risk. And, and if we look at the way the market's behaved, especially since Liberation Day, it's not been what I would call particularly sane. It's been all the money moved into not just some of the real long-term leaders, but into some of the more speculative parts of the AI trade.
Is it possible to protect yourself from the bursting of an AI bubble, if we get one, whenever that is to happen? Or is this just such an all-pervasive theme that it's very difficult to do? I noticed that you talk about getting into some defensive stocks. We heard from Michael Burry earlier this week. I mean, he's outright short NVIDIA and Palantir. I mean, what are you looking at when it comes to protecting your exposure to the AI theme?
Yeah, it's a great point. I mean, I think protecting diversification, some of the themes like the consumer staples have been almost the inverse opposite trade. We call it low vol or low volatility or less risky in terms of the stock profile. Those names have been some of the worst performing stocks this year. And so they're a reasonable natural hedge against some of the speculative behaviour that we're maybe seeing in the AI trade. So I think some of those stocks are a good way of protecting yourself. You don't want a full portfolio of them, but you certainly want a few names. And we saw that with the recent pullback, that those were the names that did quite well in the market.
But why do I believe... So you think if AI rolls over, those will go up? Or does the whole market come down?
Well, I think I'm an optimist, right? So naturally, as an optimist, I think there's a catch-up trade to be done here, rather than to worry about the broader market. But obviously, if you're investing at the market level, you won't see that. So for us as portfolio managers, we're looking at the internals, and I think that's where there's an opportunity. It's just taking a bit of the froth out of the big mega-cap names that have done really well. If some of that money goes into some of these laggards, I think they can go up, yeah. You think,
okay, they can outperform. But is this a moment... And a lot of people are asking this question about sort of, should I be thinking about my portfolio as in capital appreciation mode or capital protection mode? Is there a mindset shift that we need to go through right now in terms of the way we think about these markets?
Look, I still think we're in capital appreciation mode. The challenge and the reason people
are... indexes can go higher?
Well, I mean, one of the challenges is just a valuation of the market, and that's what's caused some of the anxiety over the last few days. But that is quite focused in a very specific part of the market. Now, there are other parts, which I would say, we just talked about the consumer, which are actually a little bit cheaper. And so they're not suffering from the same risk profile as some of the more expensive names. So I think those stocks could actually do quite well.
Give me an order of magnitude. They've underperformed. Can they... What does outperformance look like here? Does it just mean marking time and not going down? Does it mean actually... What's upside?
Well, I mean, look, one of my favourite indicators at the moment is actually the equal-weighted S&P versus the S&P, which just made the lowest level since we've seen in 2003. So, you know, that for me as a proxy just tells me that on a relative basis we could see a significant outperformance of just the broader market versus the big cap names. That's the starting point. Whether or not it's an absolute gain, we'll have to see.
Yeah.
When it comes to the buyback story, that feels like it's such a major theme, not just in the banking sector, but across the sectors in Europe. Does that sustain throughout the end of the year and into 2026, or is that a 2025 treat?
Look, I think it will sustain. I mean, look, we've had, this year, especially in Europe, profits have been okay. I mean, the growth rate is relatively subdued relative to other parts of the world. So I think we'll be okay in terms of some of those buybacks. It's whether, at the point where we've just discussed, where we've got to these excessive valuations, companies can continue to do that, because that will be ultimately a key driver of the performance as we go into 2026. But at the moment, it seems like that's pretty okay.
We haven't talked about defence. That's a bit of a theme of the morning. We've had numbers out of Rheinmetall, but the focus not necessarily on their numbers, but there's a lot of focus on how much of a build-up we're going to see in European defence. Is that a theme that you're leaning into?
For our funds, it's not a theme that we focus on. In fact, we're actually outside of those themes, and I think investors who want to play those themes should do that, but in a selective way. But I think it has had an impact in terms of how other stocks have worked. So as people have moved into defence and also into the domestic story in Europe, which is the banks as well, it's been at the expense of everything else. And so I think if there's some froth in Europe, with the similar froth that we've seen in the AI trade, then it could be in those sectors. And as a result, other things like themes such as China, the consumer, the exporters, which have been the weaker part of Europe, could become quite interesting. So that's that rotation theme, or the catch-up trade that I think is the one to come.
Obi, we're going to leave it there. Thank you very much indeed for stopping by to see us this morning. Obi Ejikeme, Global Equities Fund Manager, joining us from Carmagnac. Let's take a look at the Core 6 this morning and see what is happening there. It's interesting. So Novo is up this morning. Pfizer has matched its bid for Metsera overnight. So that's the news there. It's interesting to see that actually Novo is reacting positively to that news. Are we going to get a bidding war? Does Novo respond? We're going to wait and see. Luxury's up a little bit. Defence is up a little bit as well. Rheinmetall rising on the back of its numbers this morning. I'm not sure how useful the numbers are in terms of what it tells us about what happens next with this company next year. And the year after, and the year after that are the big stories there. But the real takeaway maybe this morning is also some softening in the AI trade. Technology and technology-related stocks are certainly seeing some weakness. Chloe Melly has many more things that we should be watching, because it's a busy morning. Haven't even talked about Zalando. So what's going on there?
Good morning, guys. So Zalando is up quite strongly this morning. We're up 7.6%. It reported a profit that beat, sales that beat estimates. Actually, there was no beat on profit and there was no upgrade to guidance, but it was received still really well by the market. Analysts have noted that the really strong sales was enough to make investors happy, and we can see that reflected in those shares today. Moving on to Commerzbank, it's a little bit of a mixed bag there for the German bank. It actually upgraded its net interest income guidance, but the third quarter results came in below expectations, and it seems that that is what the market is reacting to today, and we are down 1.8% for Commerzbank. Moving on to Legrand, we also have a downward move there for the equipment, the data center equipment company. We're down 10.8%, a massive drop there for Legrand. It seems that the boost from demand for data center infrastructure is slowing down a little bit there, and we had the third quarter sales missing estimates as a result, and it's really taking quite the beating on the back of that. We also have some downward moves for Teleperformance, which is a French operator of data centers. It cut its outlook, and we are down 4.7% on the back of that. And Diasorin, the healthcare company from Italy, is also in the red this morning, also after cutting its outlook and the earnings coming in below estimates. We are down quite a lot. We're down almost 13% for Diasorin this morning.
Chloe, thank you very much. Chloe Melly with the latest on what's happening around some of these individual movers. We're not necessarily getting the stocks play out in the way that you might anticipate this morning. And, I mean, the FTSE 100 is flat. The CAC 40, Kriti, you've been pointing out the futures were a lot weaker. And we are seeing that being delivered on, actually. The market is weaker over in Paris, down by 0.6%. But some high-profile names reporting good numbers and not going all that far. I mean, AstraZeneca feels like one of those.
It's definitely one of those, higher by 0.3%. I guess we maybe thought there was a little bit more of an attaboy coming from the market here. They had a trade deal with the United States. They're talking about increasing profits. Two of their drugs are doing really well in terms of driving some of those earnings. And yet, it actually looks like some of those initial gains are getting paired quite literally as we speak. Another big surprise is Maersk as well. We thought those were good numbers. Those shares are down pretty big.
Not as much as they were, but yes, they were down 7. They're down 4 now, 4%. Yes, and they upgraded their guidance, and they talked really positively about China, talking positively about the US consumers. So we'll see how that one plays out. We'll look for further clues.
But today's market, 274 stocks up in the stock 600, 309 down.
Yeah.
So basically, you've got kind of a one. I know that doesn't take weighting into account, but you've basically got a kind of 1-for-1 match. This is a market that is offsetting itself. Therefore, index level, not the story. Single stock story, sector story, definitely the story. And it's interesting to see just how differentiated some of these numbers are and how the kind of the reactions. We're not getting maybe the reactions you would have anticipated. But the market in total, not going anywhere.
Yeah. We will keep an eye on what's happening on these markets. Feels like one of those days. Coming up on the programme, we'll bring you the latest on Rheinmetall after the German defence firm maintained its outlook as investors look ahead to an investor day. A lot of focus on that German spending push. More on that next. This is Bloomberg.
Welcome back. What are we looking at? A market 17 minutes into the session that, to be honest, is not going anywhere in a hurry. But below the surface, there are exciting things that are happening. Single shares are moving. Sectors are certainly on the move as well. But you've basically got the same number of stocks up as you've got down. So the market's not actually moving very far at the moment in terms of the index story. But single stocks are fascinating. Let's talk about one of them that we've been watching. Rheinmetall is up by 0.8%. That's not a big move. The numbers this morning actually looked okay. Slightly lower operating margin in the last 9 months. The market is looking forward here, though. The German defence giants, the German defence sector, is preparing for major orders to come through from Germany and other EU states as the EU rearms. We spoke to the CEO. This is where he sees growth in this company going.
We start now next year the production of satellites. So the first 40 satellites will be under contract, I think, end of the year. And but Germany needs not much more. We speak about 200, 300 satellites that we are able then to produce here in Germany.
They're building satellites. They're building drones. They've just got a drone contract. They're automating the armoured personnel carriers, the APCs that they've got to produce, and the trucks that they've got to produce for the German military. All of this is coming through. It is a process that is going to unfold over many years. There's a Capital Markets Day coming up on the 18th. Ollie, the question that I'm trying to get to with today's... Sorry, Oliver Crook joins us now. I've kind of got ahead of myself. Our Europe correspondent. Ollie, what we are looking at here is a company that is gearing up for a massive spend coming through from governments. Was there any clues within today's numbers that tell us about kind of how that process is unfolding and what it's going to look like?
Yeah, Guy, I mean, looking into the future is going to be, I think, the more interesting conversation we have. You're looking into the numbers today. I think it was, sort of a soft earnings number, frankly, and kind of surprising when you look at kind of what the margins delivered. You look at their margins, they came in at 11.3%. That's basically flat from what it was last year, and that's well under what the estimates were from the market at about 13.2%. And also their sort of range for this year, they're expecting the margins to come in about 15.5%, which is below the estimate of 16%. But again, this is a business that is growing at a 25 to 30% rate every single year. They've kept their outlook more or less stable. And again, even with those sort of kind of soft numbers, as you can see on the screen there, that's not really phasing Rheinmetall. I think the more interesting conversation is about the future of this business, Guy, and that is where there's a lot of density to unpack.
Yeah, and let's talk about the short-term future then, Ollie, about how quickly the spending from the German government can come through and what that does for the short-term future of this business.
Yeah, what I think is really almost surprising and really shocking from Rheinmetall is the scale of ambition and the metamorphosis for this business and what they are trying to achieve is, I think, unlike basically almost any other business within Europe and certainly unlike many of the others in the defense space. You see other defense players that we speak to frequently on the program who are much more cautious about sort of ramping things up. I mean, you talked to him this morning. He's talking about building ammunition factories. It broke ground just this week in one of the countries, one in Lithuania, one in Latvia, there's going to be in Romania, there's going to be Bulgaria, there have production facilities within Ukraine, within Poland. This is a business that is not daunted by the scale of ambition that they're trying to get to. And I think that part of that is because he's probably having conversations with the German government that we are not privy to and giving him the kinds of assurances that he needs in order to make those kinds of business expansions. But let's not forget, they don't just make ammunition and the gunpowder, all that sort of thing. They make the tanks, they make the armored vehicles, they do cybersecurity, they do digitalization, they have to build some of the network infrastructure that goes into defense, but they also build consumer goods. They deal with exhausts on cars, die casting for these automobiles. So there's a huge amount of ambition within this business as they try to scale up. And I think that despite the fact that we're not getting all of the spending sort of immediately, this is a CEO who has the confidence to say, listen, we are going to go aggressively, and others in the industry are just not doing that.
Well, Ollie, you said it there. I mean, he was talking about capturing 25 to 30% of the upcoming NATO spend when speaking on our show earlier. What are the long-term risks to executing that plan, given the short-term optimism you just laid out?
Yeah, Kriti, just a moment on that because I thought that was really interesting. He says that they'll capture about 25 to 30% of the NATO spend within Europe. I did a sort of back-of-the-envelope calculation of what that would be. If we assume that EU plus UK GDP is about 21 trillion, more or less, you take about 3.5% of that goes to defense, you take about 25% of that, that's an annual rate of revenue for Rheinmetall of almost $200 billion every single year once you get those defense spending going up to that level. But again, as you're talking about, this is a business that is trying to capture as much of that revenue as possible because of the vast panoply of businesses that Rheinmetall is invested in. I mean, in the conversation you were just speaking about, they're expanding even further. They're going into satellites. But I think the real crucial conversation for investors, and if this is a business that can continue on the massive run it's had, I mean, the stock is up 17,000% since the beginning of the war in Ukraine, is about execution. Can they execute? Do they have the personnel to deliver the kind of hardware to sort of create the production facilities and get all of this stuff out? And there's also a major question, I think, about M&A. Is this a business that is in acquisition mode? Is this a business that might have to spin off some of its units? I think that is going to be the major question on November the 18th when you get that Capital Markets Day for Rheinmetall, where really this is the moment for the CEO to sketch out not Rheinmetall of 1 year from now, but the Rheinmetall of 5 years from now, from 10 years from now, and again, a European business with ambition that is bigger than probably any other of the ones across the sector or anywhere else, really.
Bloomberg's Oliver Crook painting us a gloomy picture for Rheinmetall despite the stopping up. We thank you so much, of course, for walking us through some of those numbers. Let's go to another major mover this morning, and that, of course, is Maersk. We had a conversation with the Maersk CEO as well. This comes, of course, as their share price is collapsing, down about 4.6%, despite the fact that they improved their full-year profit guidance this morning. They're talking about global container market expansion. They're actually very positive on the Chinese growth story. They're saying that's where the surge and the benefit to their bottom line is coming from. Take a listen to what the CEO told us earlier about his view on demand.
What we've seen actually over the past few weeks is the seasonal demand is starting to pick up quite strongly. It started a little bit before the summit between President Trump and President Xi, and it seems to continue now. So I think for as far as the next 6 months are concerned, we expect still quite a resilient demand into North America, with goods starting now to pick up pace compared to what we have seen in the last couple of quarters.
We'll say a little bit more on this. Brendan Murray, who leads our global trade coverage, joins us around the table. Brendan, I thought was really interesting from that conversation we had with Vincent Clerc, as he says the gains and the resilience, it's not the states that they've got their eye on, it's China. And that, I think, was a really surprising answer for me.
Yeah, exactly. There were two positive takeaways from the conversation with the CEO of Maersk. One was the strength of China. I think he called it the engine of the global economy at the moment. So the one message from that comment was that despite all of the pressure that China is facing with its export to the U.S., it's finding other markets in Latin America, in South Asia, in Africa, and other places. The global economy is absorbing that redirected trade. The other issue, and he said, I believe he said more recently, he's seeing that the U.S. consumer is strong despite the headwinds that they're facing.
What is interesting, he also said that U.S. importers are not trying to game the system around tariffs, that it's too volatile, too confusing to try and do that. That takes me on to what is happening at the Supreme Court, or what happened yesterday. The take overnight seems to be that actually the EPA tariffs may go, that the Supreme Court may strike them down. Is that the correct interpretation? And what, if that's the case, what happens next?
Yeah, I was watching that hearing for almost 3 hours yesterday, and you could see the betting markets just kind of gradually go down as the arguments were laid out. Particularly surprising were the conservative justices who went after the administration's arguments. Now, this is just a debate. You can't really draw any conclusions other than some of the conservative justices seemed like they were leaning against ruling for Trump and the tariffs. So yes, and the CEO of Maersk said that creates this cloud of uncertainty into 2026 that our customers are going to have to deal with. And I think his word was in a wait and see mode. So that you can interpret as a sort of economic headwind that's holding back companies as they figure out what are the tariffs going to be and on what products.
Yes, and do we end up just putting Section 232 in place? But in the meantime, is there a refund process? All gets pretty complicated. Brendan, thank you very much. We're glad you're here to watch those hearings and to talk it through for us. Brendan Murray. Coming up on the programme, we'll be speaking to the Continental CFO after the German tyre and parts maker reported a swing to in its third quarter numbers. More on that next. This is Bloomberg.
This is the opening trade about 30 minutes into today's session, red across the screen, and you are seeing the sell-off intensify in some places of the market, starting to pare back in other places. Net, it doesn't feel like we're seeing that big of a move, except for in the French market, and this is really a weightings question here. You are starting to see the likes of Schneider Electric, for example, among a few others, start to weigh that market down, but that is your underperformer across the continent, Guy.
Okay, let me show you the numbers internally. So 288 up, 293 down. The market's a little softer this morning, so actually maybe the weightings is to the downside, which I think probably is what Kriti's alluding to as well. Volume's up, that's no surprise. You've got so many corporate numbers coming through. You are going to see more churn, therefore, around what we are going to get on all those stories. In terms of the leaders, Novo is up. Pfizer has raised its bid for Metsera over in the United States. What happens next? Watch this space. But the Novo seems to be rewarded this morning because Pfizer has raised its offer. Are we getting to the ends of this? Is Novo going to come back? The market maybe is pricing this morning that it won't. Numbers yesterday, but it does seem as that Metsera story is the real driver. HSBC's up quite nicely, which is interesting considering I think it's gone ex-dividend today. Could be, I just want to check that. Deutsche Post is also up on a beat this morning, so that stock is rising quite nicely. That's providing a lift to the German market. Let's talk about the downside. Where are we seeing the weakness? And what does it tell us about what is going on? So this is all connected. Legrand, this is, take a look at a light switch, take a look at all kinds of kit that you probably have in your house. These are the makers of that kind of kit, but they also make stuff for data centers. And this morning, the Legrand story is very weak, which I think is feeding through into Schneider, which is also weak. And I think broadly technology is weak, which is feeding through into SAP, which is the heavyweight, which is down by 0.7%. So tech, associated AI, associated data center trades are all a little weaker this morning, Anna.
Guy, let's get an update on some of the other stories that we are covering this morning. The US is to cut flight capacity by 10% at 40 high-volume markets across the United States, though international routes will be spared. The FAA said the cuts to the number of flights being made alleviate pressure on air traffic controllers during the longest government shutdown in history. The FT reports the UK Chancellor Rachel Reeves is set to spare banks from a punitive budget tax raid. Sources say in a briefing, Reeves made clear she wants the sector to remain competitive and able to support the country's growth. She is expected to raise tens of billions of pounds in taxes in her November 26th budget to stay on track for her fiscal targets. And Nvidia CEO Jensen Huang has also told the Financial Times that China is going to win the AI race. He says that's based on lower energy costs and fewer regulations. His remarks come after President Trump maintained a ban on Nvidia selling its most advanced chips to Chinese customers. Huang also accused the US and UK of cynicism over AI, calling instead for more optimism. Those comments were reflected by the OpenAI CFO, Sarah Freer, yesterday, who told the Wall Street Journal tech conference, quote, "I don't think there's enough exuberance about AI when I think about the actual practical implications and what it can do for individuals." So, Guy, some very positive takes from within the industry, as you might expect, from the Nvidia CFO, the OpenAI CFO, both talking either about the need to support the sector more or about more exuberance needed and more confidence and optimism around what the sector can deliver.
See, I read it the other way and took this quite negatively. And
of course you did.
Yeah, of course I did. That goes without saying. But she's basically saying you're not exuberant enough. You're not seeing the true picture here.
Yeah.
She seems to be implying that the recent kind of bubble fears are not where we should focus. But she's clearly focused on them. She clearly recognises the fact that everybody's talking about the fact that maybe there is a bubble.
Yeah.
Because that bubble, if people do get concerned about it, is going to impact the funding that there is available for this sector to deliver all the compute, all the data centers that people like OpenAI would like to see. And it's interesting that Jensen Huang is also pointing to the fact that China is winning. I think these two conversations are related.
Yeah.
FT is reporting this, that China's winning, i.e. telling the US government this is a strategic imperative that you need to back this. And the OpenAI CFO was also talking about the fact that there could be a need for government guarantees, which implies that the market is not going to be there for them. Maybe the government needs to be there for and backstop some of this debt, which is going to be enormous. Now, we've seen this in the past. But is the US government really willing to be there to backstop the debt of the AI trade?
They bought some Intel shares.
I was about to say,
I mean, they've got some skin in the game. But yeah, that's a different question.
It's a big step forward, though, isn't it? But we have seen it in the past. They did it with the railroads. They've done it with various other big kind of infrastructure build-outs. Post the Second World War, there was obviously the big kind of roads build-out. So all of that was there. Are we at the beginning of that conversation now where the AI trade is saying to Washington, this is a strategic imperative. You need to back us.
I mean, the White House is also saying that. Jensen Huang is also saying that, right? But to your point about Sarah Freer, maybe she is saying that maybe the growth that we aren't seeing or that isn't captured in the U.S. stock market, the start or the expansion, to your point, maybe that is in China. So those two stories are potentially related as well. I don't know. I think it's fascinating. I think there's a lot of private capital that's invested in this. There's a lot of credit markets that are invested in this. The hyperscalers is now broadening out. There's a lot of places you can go that if there is some sort of drawdown in the stock market, there's other places that you can find the money.
Let's talk about what we're having here in Europe this morning, and that is a deluge of corporate reports. One of the stocks we haven't mentioned thus far is Continental, the German automotive company, which out with numbers. As you can see, the stock is down a little bit. Actually, one of the more mild reactions that we're getting, pretty much in line with what we are seeing. Third quarter net loss has been delivered. Now, you've got to remember, this is a company that's been through quite a lot of turbulence. We've got cost cuts coming through. You've also had the Aumovio spin-off as well, which is another factor in terms of your thinking. Maybe the comparisons over the last few years aren't useful in terms of the corporate numbers we're getting this morning. The company's CFO is Roland Weisberger and joins us now. Weisberger, good morning, Roland. Thank you very much indeed for your time. Given the change that we've seen in this business, Just walk me through what today's numbers tell us about where the company is right now, after the cost cutting, after the spin-off. How should I read these figures?
Yes, good morning. So operationally, we achieved a good result in the third quarter. Adjusted EBIT is substantially improved versus the second quarter, both at ContiTech and at Tires. Free cash flow is up 8% versus prior year, and we achieved two major milestones you already touched upon. With the listing of Aumovio at the Frankfurt Stock Exchange September 18, we completed our spin-off of the automotive business. And in the first 7 weeks of trading, Aumovio and Continental combined created additional market cap of 2 billion, so we're very satisfied. And we already made the second step in our transformation. We signed an agreement to sell the automotive part of ContiTech. So operationally, we're doing good in the third quarter, and we're making progress towards executing our strategy roadmap.
Okay, cool. So that's where we are now. Let's talk about where we go next. And I'm trying to understand the guidance picture here at the moment, because I'm a little confused as to maybe what the message has been over the last few weeks. You had a pre-earnings call where you pointed to actually tyre margins being at the bottom half of the range. But a couple of weeks earlier, you talked about them being okay, and I'm wondering what the picture is now. What is the guidance that we should be taking away from these numbers about what comes next? Because the last few weeks have provided a little bit of volatility in maybe what you're anticipating, and I don't really understand kind of how the story is evolving at the moment. So maybe you can clear that up for me as well, and tell me where guidance is pointing the business to as we report these numbers.
Yes, I will. So thanks to our good replacement business, specifically in the North America region and in Asia and the tires business, Q3 return on sales for tires came in at 14.3%, and we won several prestigious awards for our business and for our products. And at ContiTech, due to the weak market environment, we started to initiate cost-saving measures early on this year, and this is now paying off in the third quarter. So also at ContiTech, year on year, our EBIT improved. Now, in the third quarter, July and August came in pretty weak, but we had a fantastic September, and this pretty much saved the day. So a lot of things were on green in the last moment. We had a good price mix in the tire business. Cost-saving measures paid off, and we also had a relief from the tariff side, and that led to the good third quarter results.
Roland, good morning. Can I ask you more about those tariffs? You talk about relief on the tariff side, but we have had 25% tariffs on heavy-duty trucks imposed, a business that's slightly related to yours, I suppose, from November the 1st. How are you seeing the tyre replacement play out in the United States with regard to the tariff environment and all the rest?
So tariffs created quite a big headwind this year. So it already started in May. First, we had to pay an additional 29% tariffs on all the imports of passenger car tires we're importing from our big European plants in the US. And this has come down now, beginning of August, to 15%. But the entire cost burden cross for the full year 2025 for the tires business alone is a low triple-digit million euro amount, so quite substantial. We initiated a lot of measures in order to compensate for this burden, and we have been successful in the third quarter in the tires business and at ContiTech.
Yes, let me ask you about ContiTech. You've mentioned how plans for ContiTech are moving forward. Have you got enough interest to expect a sale in the first half of 2026, Roland? What's your level of confidence in that?
So, in general, we are expecting markets to continue on the improvement track. So we have seen that industrial markets coming back, though we hope that will continue into 2026. You know that we announced plans earlier on that we want to sell the industrial portion of our ContiTech business in 2026. And we want to complete the transaction in the second half of this year. We are now in the final stages of preparing for the sales process. There's a lot of indication from potential buyers that they're interested in the sales process, want to take part, and we will start soon to approach the market, and we're confident we can complete next year.
Roland, it's Kriti in London. I feel like we need to continue our tour around the world. We talked about the United States. We talked about Europe. Let's talk about China, if we can, for a moment. Are you seeing the same trends in China that you're seeing in Europe? in the United States, especially anecdotally, now that we do have some sort of trade truce between the world's two largest economies?
Whereas what we're seeing in China right now, if you look at the vehicle production, China is up on the PLT side, whereas in North America and in Europe, we're still down. So obviously the stimulus taken by the Chinese government is now paying off. So we have a tailwind on the Chinese side of the market. Also in the replacement business, we're doing good in the Chinese market on the tire side and also at ContiTech. So China is actually right now a plus for us.
All right, Roland Welsbacher, Continental's CFO, joining us around, joining the program, I should say. Next time we'll have to have you around the table. We thank you so much for your time. Coming up, the earnings conversations does indeed continue. Brian Duffy, the CEO of Watches of Switzerland, will join us next. Of course, the top seller of Rolex watches in the UK, issuing a trading update. That conversation next. This is Bloomberg.
Welcome back to the opening trade, 8:45 here in London. And we have a European session that is showing quite considerable downside in some of these markets, in particular the French market down by 0.8% right now. A bit more resilience or a lack of movement in London. Some doubts around technology continue to persist and all the related things to that sector. Nasdaq futures down by 0.4% now. Let's keep our focus on some of these earnings stories this morning. Now, Watches of Switzerland has reported revenue for the first half year that beat the average analyst estimate. The shares are doing well today. They're up by 6%. The year-to-date story is still lower by 26%, but still the shares are bouncing this morning. Brian Duffy joins us, the CEO of Watches of Switzerland. Brian, really nice to have you with us. So a nice pop in the shares this morning on the back of these numbers. And it seems like the strength is, in large part, coming from the United States. You're describing the US market as a standout performer. How sustainable do you see that performance in the US as being?
Well, you know, we'll see. We've been growing in the US every year since we've been there. We're $1 billion business in the US, and we only entered the market 7 years ago. And we've had growth every year, and you know, we plan to continue growing. Obviously, I think our 20% for the first half year was very good and strong across everything, across all of our brands, across the geography, the entire geography of the US. Across watches and jewellery, strong e-com, strong pre-owned business. So a lot, from my standpoint, to be very positive about in the US, and I do think we'll continue to grow and outperform.
Okay. And so can I ask you about the tariff story and how that relates to your business? Because there might be a need to manage inventory ahead of changes in tariffs. We know that Switzerland is up against some pretty tough tariffs as far as some of those Swiss watchmakers are concerned. How is the tariff story playing out for you? Where is it evident in your numbers?
I mean, so far in our numbers, it's not particularly evident, but not everything that might be tariff related has happened yet. Negotiations are continuing on tariffs that we're aware of. It's a 39% tariff rate at the moment, which is obviously very high, and it was a bit of a surprise when that happened. But discussions are ongoing. You might have seen this morning there was a very senior group of business people, including representations of the watch industry, met with President Trump yesterday. So that's an encouraging sign that was reported this morning. So our expectations, and I think the general market expectations, is that the situation will improve. In the meantime, some brands have taken action on pricing. Not every brand has. So far, we haven't seen any negative impact from that with the consumers. But it's still a bit of uncertainty as we get into our second half year, that's true.
Brian, it's Kriti in London. Let's just expand a little bit on that margin story there. You mentioned pricing. I mean, some of your competitors have actually raised pricing by quite a bit. So just walk us through, are you seeing that, or are you seeing more cushion to be able to pass on some of that pricing to your customers? Or is that margin that, should negotiations not go well, something that the Watches of Switzerland is able to absorb?
Yeah, I mean, first of all, I'll just remind everybody, a little more than half of what we sell to clients have been waiting very patiently for their products on a registration of interest lists, and they may well have experienced, more than 2 or 3 price increases while they've been waiting. But the desire is such, and the supply and the demand dynamics are such that people will wait. And we write to every client when they're waiting for a product and tell them the prices are going up and ask them to confirm their interest. And almost inevitably the interest is confirmed. So we're unusual in that sense. And we have, if you like, a strength against the potential of price increase because of the desirability of the product. It's a category that over the years has had natural inflation. It's Swiss franc denominated. It's precious materials. You've got the price of gold that has an impact in diamonds and gemstones. So as a category, and it's one of the strengths of the category because you're preserving value over a long, long period. And if you look even over 30, 40 years, most of the growth that's been in this category has been on price and value rather than volume.
Yep.
So we're not complacent about it. And obviously, there's been the other thing I should mention. Product introductions from the brands have had a bit more of a value consideration, particularly here in the UK market. As has been the case historically, and this industry, I think, will manage this situation positively.
Brian, good morning. It's Guy. The US stock market, crypto, everything's done really well for a long time. And that's obviously provided quite a lot of demand. How tied are your fortunes, do you think, to what happens with the Max 7, NVIDIA, all these kinds of stock names, and what happens with the crypto story? How key is that as a source of wealth in the United States, as a driver for your business?
But I think it's a fair point, and I do think that the financial asset valuations affect the mood of our consumer in the US without any doubt. Again, I'd say our 7 years experience in the US has been ups and downs in the economy, but we have always grown and always grown well. We've never really experienced the kind of new money from crypto. And again, in our business, we really develop long-term client relations. We don't, no matter how much money somebody has, you don't jump the queue when they're looking for key products. So we don't really register any particular impact from crypto. Well, specifically, but yeah, financial assets affect the mood. Here in the UK, the value of homes and so on affects mood. So it's a relevant point.
And is your sense at the moment is that the US consumer is solid? People talk about this kind of K-shaped recovery, that the upper end of the US consumer continues to be something that feels just like it's on rails at the moment in terms of its ability, that consumer's ability to go out and spend money. You don't see any kind of hint at this stage of caution.
No, honestly, we don't. Plus 20% with no significant incremental element, no acquisition or anything year on year that we're looking at. So 20% is a real measure of the growth that we're experiencing. But again, I just repeat, we've ups and downs in the economy. We've seen consistent growth throughout. The other thing I would say too is the biggest market for luxury watches in the world is the US. The fastest growing market in the world is the US. Structurally, it was underinvested, and that was our observation. And I think we've been proven to be correct. So there's an underlying structural demand increase that's happening. There's investment going into retail from us and others. So the investment going into marketing and client service and so on. And the American consumer is responding very well. We also have a younger consumer in the US. I think it's very interesting, very influenced by digital and social media communications and so on. But there's a real great interest. There's great expertise in watches in America that was never been fully exploited, is our take on it. So we're delighted to be there. And our business today is 50-50 US and UK. We love the UK market, of course. It's our home market. We've been here for over 100 years as a Watches of Switzerland. And the UK market has done well too, and comparably plus 5%. And we expect growth to come in the UK. A lot of good activity, a lot of great new product coming into the market, and again, a lot of clients that are patiently waiting for their products. So it's a special, I think, pretty much unique category within the world of luxury that we're very lucky to be in.
All right, Brian Duffy, the CEO of Watches of Switzerland, joining the program this morning. We thank you so much for your time and your commentary, of course. Let's talk about what's happening in the day ahead. We've gotten through a lot of earnings this morning. It feels like it's now time for some central bank decisions. Why not? Add it to the pile. 9 a.m. UK time, Norges Bank rate decision. Just 3 hours later, we, of course, have the big one, the BOE rate decision coming up later. Some earnings in the States, some Fed speak, and, of course, the Tesla AGM as well, Anna.
Yes, indeed. Let's get to the Bank of England. Sorry, I'm so blown away by all the earnings stories. This shift of pace to monetary policy has thrown me. But I'm here. I'm present. Right, the Bank of England will likely keep interest rates on hold today at 4%, ending a run of quarterly reductions. Lizzie Burden, she is not thrown by this switch to monetary policy. She's all over it. Let's get to her. She's got a preview for us of what to expect. Set us up for the decision, Lizzie.
Yeah, Anna, a hold expected at 4%, but don't hit snooze. At 12 p.m, we could get a surprise rate cut. That's what's expected by Barclays, Goldman and Nomura. And even if it isn't a cut, it could be a really tight vote split. Some saying it could hinge on the governor today, even if the consensus is for a 6-3 vote split. The reason it's so tight, well, of course, they are inching towards neutral rates, wherever that may be. Most economists think 3%. But also, of course, there's that budget on 26th of November. And yes, the Chancellor on Tuesday promised it's going to be disinflationary, but I'm sure that the Monetary Policy Committee is going to want to see for themselves and be cautious about making monetary policy around that fiscal policy. That means, of course, that the updated forecasts today are somewhat moot because we don't know what's in the budget yet, although the expectation is that they're going to downgrade the inflation forecast for this year and next, but keep the forecasts for growth and unemployment unchanged. I'm interested to hear what the governor has to say, though, about the Chancellor and her budget after she blamed those 4% interest rates for constraining business borrowing.
All right, Lizzie Burden, outside the Bank of England, we thank you so much. We are, of course, seeing FTSE 100 really flat right now. It's not really getting in some of the moves in either direction you're seeing in the broader indices. You're also seeing cable at about 130, just shy of 131. Our special coverage of the BOE rate decision will begin at 12:15 p.m. UK time. Governor Bailey's press conference later in the hour. And, of course, an interview with none other than the governor himself at 4 p.m. UK time. Lots to digest. I don't even know where to start.
Is that it? Is it over? I think probably is my take on this morning. That was a manic Thursday in terms of the corporate reporting that we've seen. I think it's the last one of the reporting season, so this is the kind of high watermark in terms of the numbers that we are going to see. I just think it's fascinating that you're getting basically an offsetting within the market, like ups and downs. I just think this is a market that is struggling for direction. There's been some big moves this morning, and we are continuing to see kind of an offsetting factor. For every good one, there's a bad one.
Yeah, and there's the Fed narrative and central bank narrative to feed into that. We'll leave that to the US team and the Pulse. That is up next. This is Bloomberg.